Hi, Assalamualaikum. Farah, Julia, Amira and Alia will present to you our assignment for Principles of Islamic Accounting. What is worldview? Worldview is a set of implicit and explicit assumptions about the origin of the universe and the nature and purpose of human life. It controls the nature of man's reflection on almost any subject. The worldview of Islam encompasses both the worldly aspect and the religious aspect, in which the worldly aspect must be related in a profound and inseparable way to the religious aspect, in which the religious aspect has ultimate and final significance. The worldly aspect is seen as a preparation for the religious aspect. Everything in Islam is ultimately focused on the religious aspect without thereby implying any attitude of neglect or being unmindful to the worldly aspect. The function of both Islamic and conventional systems of accounting are to provide information. Nevertheless, there are still differences that we can compare between Islamic and conventional systems of accounting. Islamic accounting enables users to ensure that Islamic organizations, whether business or government, abide by the principles of the Sharia or Islamic law in its dealings and enables the assessment of whether the objectives of the organization are being met. Conventional accounting concentrates on identifying economic events and transactions, while Islamic accounting must identify socio-economic and religious events and transactions. Islamic accounting is more holistic in its approach as both financial and non-financial measures regarding the economic, social, environmental, and religious events and transactions are measured as well as reported. Islamic accounting may require a different statement altogether to decipher the focus on profits by the income statement provided by the conventional accounting. Islamic accounting has dual worldview which are believed in this world also the hereafter, while conventional accounting focuses on more materialist worldview that make this world is everything. Mostly conventional skeptical towards the concept of life after death compared to the Islamic worldview. What man does in this short life affects his prospect in the hereafter. This relates to the accountability concept. For Islamic worldview, Mardatilah and Al-Falah become greatest value in economics. Hence, this made accountability to God and society in accounting. However, conventional accounting makes material wealth and sensuous pleasure become greatest value. So, consumerism in accounting increases, and the shareholder to maximize the wealth in accounting. Islamic accounting recognizes the society are the users of the reports. The reason being that society as a whole can make corporations accountable for their actions and make sure they comply with Sharia principles. It does not harm others while making money ethically and do achieve an equitable allocation and distribution of wealth among members of the society, especially the stakeholders of the corporation concerned. Conventional accounting is defined as the identification, recording, interpretation, and communication of economic events to permit users to make informed decisions. Conventional accounting aims at permitting informed decisions, ultimate purpose of which is to efficiently allocate scarce resources available to their most efficient and profitable users by providing information efficiency in the market. Apparently, this is achieved by the user making the appropriate buy or sell decisions on their investment. On the other hand, Islamic accounting enables users to ensure that Islamic organizations abide the principles of the Sharia or Islamic law in its dealing and enable the assessment of whether the objective of the organizations differ from their conventional counterparts by having to adhere to certain Sharia principles and rules. This also is trying to achieve certain socio-economic objectives encouraged by Islam. In whatever way, Islamic accounting must be holistic in its reporting. Thus, financial and non-financial measures regarding the economic, social, environmental, and religious events, as well as transactions are being measured and reported. Conventional accounting mainly uses historic costs to measure and value the asset and liabilities. From an Islamic point of view, at least for the computation of zakat, current valuation is obligatory, prompting calls for a current value of balance sheet.
Ethic. What is ethic? Ethic is a system of moral principles that affect how people make decisions and lead their life. Ethic is concerned with what is good for individual and society, and is also described as moral philosophy. When we hear the word ethic, the first thing that comes to mind is having to make the right and wrong decision. Many ideally say that ethic is a conditional term, and what constitutes right for one person may not be right for someone else. While this may be true in reality, but when it comes to accounting, it is not this simple. Ethic refers to principles such as honesty, morality, and integrity. In accounting, these principles are established as a code of conduct that is set by governing bodies. While the ethic code varies by each country, the basic rule remains the same. Accounting, ethic isn't just a list of rules that need to be followed, but it is inherent with the profession itself. The ethic code ensures that all members of the company demonstrate integrity and honesty in their work with clients and other professional relationships. The ethic code also prevents accountants from associating themselves with any information that could be misleading or damaging to the client or the organization. Let's move to MIA Code of Ethics first. As we know, Malaysian Institute of Accountants is the umbrella body of the accountancy profession in Malaysia, and of course, MIA Code of Ethics is substantially based on the Code of Ethics for Professional Accountants issued by the International Federation of Accountants, IFAC. In June 2005, the IESPA, formerly the Ethics Committee, issued a revised Code of Ethics for Professional Accountants. The revised code established a conceptual framework for all professional accountants to ensure compliance with the 5 fundamental principles of ethics. One is integrity. A professional accountant should be honest in all business relationships. Number 2 is objectivity. A professional accountant should not allow bias, conflict of interest, or undue influence of others. Number 3, professional competence and due care. A professional accountant has a continuing duty to maintain professional knowledge and skill at the level required to ensure that a client or employee receives competent professional service based on current development in practice, legislation, and technique. A professional accountant should act diligently and in accordance with applicable technical and professional standards when providing professional service. Number 4, confidentially. A professional accountant should respect the confidentiality of information acquired as a result of professional and business relationship and should not disclose any such information to third party without proper and specific authority unless there is a legal or professional right or duty to disclose. Confidential information acquired as a result of professional and business relationship should not be used for personal advantage of the professional accountant or third party. Last one, number 5, professional behavior. A professional accountant should comply with the relevant law and regulation and should avoid any action that discredit the profession. Next, the AAOIFI Code of Ethics. Based on the Sharia foundation of the ethical principle for accountant, in currently available Code of Professional Ethics for Accountant, provide these principles do not contravene Sharia rules and principles. The following ethical principles for accountant are derived. Number 1, amanah. Trustworthiness. The accountant should be trustworthy and honest in performing his professional duties or service. Number 2, legitimacy. The accountant should make certain of the legitimacy of everything relating to his performing professional duty or service according to Sharia rules and principles. Number 3, objectivity. The accountant should be fair, impartial, and unbiased, free from conflict of interest, and independent in fact as in appearance. Ensure that the accountant should not subordinate his professional judgment and duty to suggestion of others. Number 4, professional competence and diligence. The accountant should be professionally competent and well equipped for carrying out tasks required in the course of performing professional duty or service so that he can perform such tasks diligently and properly, saving no effort in order to discharge his responsibility toward Almighty Allah and toward his society, profession, super and clients and himself. Number 5, faith-driven conduct. The accountant's behavior and conduct should be consistent with faith value derived from Sharia rules and principles. And the last one, professional conduct and technical standard. In the course of performing his duties, the accountant should observe the rule of professional conduct present in Section 3 and comply with the accounting and auditing standard for Islamic financial institution. We can conclude that some of the ethical principles contained in this code have common base from both Sharia and the accounting profession. Other principles are based entirely on a Sharia foundation, such as religious legitimacy and faith-driven conduct. Some of the ethical principles are based solely on a professional basis which does not violate the Sharia rule and principle, such as the principle of professional conduct and technical standard.
Accounting is a profession that is associated with economic aspect as well as moral aspect. In this sense, behaving ethically and professionally to communicate financial data for decision making are expected traits of accounting. In terms of educating an individual, Islamic Sharia is concerned with the intellectual qualities that are required of Muslims to achieve. It is important to educate Muslims of the importance of the value of being a good human being. In the sense of establishing justice, Islam is concerned with protecting the interests of Muslims and should be able to differentiate between the right and wrong and to act fairly to all. The last benefit is the realization of maslahah to other people. The principle is piety. In Islam, piety can be defined as taqwa. Fearing Allah in secret and in public is to protect the accountants to behave in accordance with Sharia principle and avoiding the prohibition of Allah. Righteousness refer to the fact that an accountant should perform his occupational or professional duties in the best possible manners, and then having academic qualification, practical experience as well as the religious knowledge will help to improve the righteousness. Allah-fearing implies to the fact that an accountant in performing his or her occupational or professional duties should act in Allah-fearing ways. And then the last one is accountability before Allah. It means that the accountant should be accountable for his action in this world and for the hereafter. Concept of goodness based on Sharia rules and principles have been used by the professional organization such as Accounting and Auditing Organization of Islamic Financial Institution. It is to establish a code of Islamic ethical conduct for accounting in 1998. The purpose is to motivate and develop the awareness of accountants to comply with such a code for reason due to religious belief and as a means of obeying Allah's order and refraining from things forbidden by Him. The structure of Accounting and Auditing Organization of Islamic Financial Institutions Code of Ethical Conduct consists of 3 sections, namely Sharia Foundation of Ethics for Accountant, Principle of Ethics for Accountant, and the last one is Rule of Ethical Conduct for Accountant. The Sharia Foundation of Ethics for Accountant depicts 7 basic foundations that are very fundamental of ethics in Islam, namely integrity, wise currency, sincerity, piety, righteousness, Allah-fearing, and accountability before Allah. The integrity in Islam requires the accountant and others who are in charge are competent and adequately qualified. The next is wise currency, whereby it is stated in Surah Al-Baqarah, verse 30. Here it means the human being is only as a vicegerent of God in this world that should observe the commandment and prohibition of Allah. Mankind also should be accountable for every of their action regarding the way he or she has acquired the wealth, as the ultimate owner is Allah. Sincerity means the accountant should obey Allah in performing their work. It is also referred to accountant to be professional, as they should not subject themselves to external influence or pressures.
Based on Islamic leadership, trustworthiness refers to three things, which are fear of Allah, not using Allah's ayats to their own advantage, and no fear of mankind. Leadership in Islam centers on trustworthiness, which it represents a psychological contract between leader and their followers, that they will try their best to guide, protect, and treat their followers justly. Trustworthiness can be classified into two, which are for Allah and for mankind. There are four elements under the classification for Allah, which are Iman, Islam, Ihsan, and Taqwa. Meanwhile, under the classification for mankind, there are four elements of trustworthiness. They are just, responsibility, integrity, and accountability. Trustworthiness relates directly to ethics on two specific dimensions, integrity and benevolence. In brief, a trustworthy party is one that will not unfairly exploit the vulnerabilities of the other party in the relationship. Trust relationships exist at many levels, which are between two people, among members of a team, between teams, within an organization, between workers and management, and even within an entire system, like the financial system or the air traffic control system. To discipline accountants, the first thing they should do is to respect the confidentiality of information acquired as a result of professional and business relationships, and should not disclose any such information to third parties without proper and specific authority unless there is a legal or professional right or duty to disclose. Confidential information acquired as a result of professional and business relationships should not be used for the personal advantage of the professional accountant or third party. From this action, the accountants can be trusted, and trustworthiness exists between the parties involved. But the thing is, do these ethical rules are sufficient to discipline accountants? One of the major concepts about being an accountant is accountability. Accountability can be defined as the responsibility of accountants or the accounts department of a particular business to keep finances of a business clear and transparent. Accountability creates a sense of responsibility among the accountants and accounting firms, as they know any kind of negligence and carelessness can make them legally responsible. Other concepts that the accountants must follow are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. So, to discipline accountants, they have to follow this code of ethics to assess trustworthiness from other parties.
I think that's the end of our presentation. Sorry for the shortcoming that we did. Thank you for listening. Goodbye.